All right, we are live. We are live with Bill Barhydt. I would have gotten that name incorrect. I'm horrible with these names.
It's all good.
Of Abra. I got to be honest with you. I've never actually used Abra. I've been hearing about it for quite some time, and I am very intrigued, very interested. I'm wondering why I didn't use it during this last bear market. Would have been a convenient tool to use, it sounds like.
I'm wondering the same thing, actually. So we'll have to dig into
that. So I'm very looking forward to this episode, learning more about it. And if we could cut right to the chase, actually, there is a rumor that maybe Monero might be kind of more fully integrated into Abra in a native way. Is that rumor true?
Yeah,
is that
it is, and we're working on that. So we're doing it in a few stages. You can now withdraw Monero to use it for money send, purchases, or withdrawing to hardware wallets. That's all live now, and we have people using it, and that's great. And then the next step is to also allow people to deposit Monero into the Abra wallet. That's a few weeks out, but we will get to it. We're crazy busy right now, but I love Monero. I think it's a really cool tech, and I'm really excited that we've been able to add this feature. So I hope people try it out and give us some feedback.
When did that go live?
I think it was 2 weeks ago or last week. I don't know, because I also get I have to separate from the marketing message when we send it out to users and when we start testing internally, because I see it for a while before the public, and so sometimes it gets my internal wires in my head get crossed as to when it's public. But I think it's been a couple of weeks now that the public has had it in the app. So if you just download Abra, the easiest thing to do is, if you want to try it, it's pretty cool. You just put a bunch of Bitcoin in the app. You can convert the Bitcoin to Monero, and then literally press withdraw to an external Monero wallet, and you'll see how it works. It's super easy.
That's awesome. And then, like you said, in a few weeks, you'll also be able to deposit with Monero.
Yeah, by far the bigger request was for withdrawals, because people want to use Abra to convert existing cryptos into Monero for their purchases, send money, whatever the reason. So we had that request for a few cryptocurrencies. And if you look at in terms of deposit and withdrawal support, in most cases the withdrawal requests were like 50x more than the deposit request, because they were looking at using Abra as the vehicle to get that crypto in the first place. And then, of course, at that point, the withdraw mechanism, which is a quasi spend function, is more important.
Awesome. So why did you guys? I mean, we'll get into what Abra is. Obviously, we need to talk about that. But why'd you guys even add Monero? What was the? Why do you guys like Monero?
Yeah.
I don't think it's that.
First of all, I have to put my personal bias aside, right? I am a huge fan of the tech behind Monero. I have a very strong bias as a cypherpunk, a longtime cypherpunk. Used to have the long hair and the earrings back in the early 90s. I'm all about the manifesto of information privacy and privacy on the internet, and I fundamentally believe that that's should be a human right. Now that aside, what Abra does is we run a crypto wallet which enables people to and the crypto features. We also have equity features for our non-US users, but for our US users, the wallet basically, and our global users actually, the wallet allows you to buy, store, hold, transfer between 30 different cryptocurrencies. The largest ones, Bitcoin, Ether, of course, Litecoin, Bitcoin Cash, et cetera, et cetera. And then there's a long tail of currencies, and obviously Monero and a couple others at the top of that, like Zcash at the top of that long tail. And you can exchange between any combination of the two. If you're holding Ether, you can go to XRP. If you're holding XRP, you can go to Monero, et cetera. The decision in terms of what we add is based on several factors, and ultimately it comes down to demand. Just given the large amount of work involved in supporting all of these cryptocurrencies and being able to exchange between them, manage liquidity. It's actually a complex undertaking. And then we have other parts of our business which enable people to deposit fiat via our partners and convert the fiat into crypto. Internationally, outside the US, we've launched an equity business which allows via our Asian subsidiary non-US persons to invest in equities via crypto, which is pretty cool. And so we have to weigh, all of the things we're working on at once in building this kind of crypto bank, if you will, versus, what our users really want and what would be cool to work on, but maybe no one wants per se.
Awesome. And I guess we should describe what Abra is so people even understand what it means that you're adding it
Sure.
natively. If you
Yeah.
want to go ahead and give a quick explanation of how you guys basically function.
Sure. So Abra, again, it's a smartphone-based wallet app, runs on iPhone and Android, that basically allows you in a non-custodial model, meaning Abra is not holding the keys, you are, to basically store any of the cryptocurrencies that we support, as well as other asset types. We support myriad fiat currencies, true USD, and are adding other asset types and assets all the time. And you can exchange between any of them within the wallet. You can send to other Abra users. You can send to external wallets. You can send to other Abra users just by typing in your phone number. You can exchange just by clicking on the exchange button and saying, I want to convert my true USD to XRP. I want to convert my XRP to Monero, or any combination of that. And as we just talked about, you can obviously withdraw to external wallets, either for payment or for storing in a hardware wallet, or if you want to move on to an exchange. We also have a lot of users who move their assets onto an exchange, and they treat Abra more like an offline wallet that they can carry around with them, which is, a little bit more convenient than a hardware wallet, because you can put it online, but you don't have the security risk of somebody being able to hack it, since the keys are offline.
Right. And then but I guess what the real kind of difference between you and exchanges and a lot of the other companies out there is that you don't actually hold you don't actually own these assets as a user. You really kind of always you only own the native assets, right? So, which are Bitcoin and soon to be Monero, and then everything else is basically through. You'll explain this, but through smart contracts where you feel like you're owning these assets, but you're really kind of just leveraging your Bitcoin or potentially your Monero to own those assets.
Yeah, that's right. So the easiest way to explain it is in terms of the equity business we launched. I'll emphasize, because I know we have a lot of Americans watching, that's a non-US thing, but functionally, it's important to explain how the smart contracts work. If you want to basically buy, an investment in Apple shares or in Spiders, which is a tracking ETF, you basically use Bitcoin or Ethereum to say, okay, here's $1,000 worth of Bitcoin, and convert that into $1,000 worth of exposure to Apple. And in the background, to you, it looks just like you're investing in Apple. Mechanically, if the price of Apple goes up versus the dollar, you're going to end up with more dollars at the end of the transaction. If the price versus the dollar goes down, you're going to end up with less dollars at the end of the transaction. But all of the settlement and movement is happening based upon Bitcoin multi-sig scripts in the background. And there's lots of presentations I've done online, and others in my team have done online. They're on YouTube and Reddit and other places where you can read more about the detailed mechanics of how these smart contracts work. In trading terminology, it's what we call a delta neutral business, which means you're not taking balance sheet risk against Abra to get that price exposure. And again, it's a long explanation as to why, but we've done this with lots and lots of asset types now, and we're really good at it. And the system has worked for quite a while. And our users generally don't have to understand the nuanced mechanics of how all this is happening. They just know that if they want to use Abra to get price exposure or to move money or whatever, that it just works. Just like when you swipe a credit card, it just works. So, and then over time, we've taken lots of different assets native, because it's easier to support them native once the volume gets to a certain point. You can't do that with equities, right? Because we're not a broker dealer or anything like that.
So which ones are native? Which ones are native?
So we've launched native withdrawal support for everything, right? Meaning you get native access to every cryptocurrency in the system, and soon, hopefully, true USD as well. So you can actually do true USD withdrawals.
But if you're holding, let's say, I don't know, Dogecoin on, I don't even know if you have that on Abra. I get that you could retrieve it natively, but you're never actually holding Dogecoin, right?
Not yet.
Until
Not
you
yet.
get okay.
Yeah,
Not yet.
you will be able to hold it natively. So the
Okay.
goal is to take all of the cryptos native,
Okay.
and so we're just doing it in stages, like I mentioned. So because it's a lot of work, but like I said, most of our users won't even see the difference once that happens. It's more of an under the hood difference. It actually has a difference to Abra because of the cost basis for us. It actually costs us money to maintain the synthetic assets. But part of the advantage of doing it that way is we can roll out new assets very, very quickly and then learn what's interesting to our users. And then take certain assets native later on if it warrants it, or take them out of the system if they're not showing any interest with our user base.
So all of the cryptos all the cryptos that you guys carry will eventually be native, and they'll no longer be synthetic assets.
That's right.
And then so
That's
all
right.
the synthetic assets that you have or will have, those are always going to be based on smart contracts that use Bitcoin as collateral only, or will eventually you'll be using other coins as collateral as well?
Yeah, the system supports Bitcoin and Litecoin as the base asset class, which you're calling the collateral. Almost 99.999% of our users are running that off of Bitcoin right now, but we have the ability to switch users more or less at will to other assets, particularly Bitcoin forks, just because of the way the multi-sig scripts work. We have imported it to other non-Bitcoin forks at this point. The first logical choice would probably be Ethereum, because that actually gives us certain capabilities in the smart contracts that we don't get with Bitcoin. But right now, to be honest with you, our system works great, and so there's not a lot of reason for us to be investing in ports that don't really add a lot of value to what we're doing.
Why would a user choose to use Litecoin versus Bitcoin?
Well, we don't give them the choice.
Okay.
There's business reasons why we would want that to happen. Gotcha. For example, in terms of how the hedging works, or mining fees, or other things, but none of those things are creating those kind of problems for us right now. So it's a good kind of hedge in terms from a technology perspective to have that in our back pocket. And we've thoroughly tested it. We've been very public about the fact that we've done it. But we haven't had a big reason to switch users onto Litecoin yet, for example, or even porting to another asset like Ether or potentially Monero. But
yeah, that's kind of what I was eventually getting at, because I mean, I ultimately see, I don't know if you agree with this at all, but I ultimately see Monero, if there is any hedge to Bitcoin in the crypto space, they all seem to follow Bitcoin, right? But if you had to choose a hedge based on technology, I kind of see Monero as kind of being the only hedge to Bitcoin if you were going to make that comparison for various reasons, like on a technical level, the differences in the technology and the differences in the protocol. So just curious if you guys were ever considering potentially that on the back end, using Monero for those purposes, if that would ever potentially come into play.
I have not been involved in discussions that have done that. I would tell you if I had. It's possible that others in my team have and haven't presented it to me. But like I said, I'm a big believer in the obfuscation technology and the way it works. And I'll be honest, there are things I like about CK snarks as well. And I know that there's polarization across the communities, and I understand that. And I kind of respect that, because I think that one of the advantages of the altcoins, and this is where I differ with a lot of the it's Bitcoin or nothing, purists, is that even if some of these altcoins end up disappearing 20 years from now or 15 years from now, I think there's a lot of tech that's being tested, if you will, that is ultimately going to be the cream that rises to the top. And either survives on its own, like I think Monero probably will flourish over time, but could also be integrated into other assets, whether it's Bitcoin or whatever the Facebook coin is that they're going to announce, and we'll see what happens, right? And so we need that level of technology competition beyond just the testnet level, so that we can understand what works and why, and what the public wants and what the public doesn't want. And it's very hard to do that in a decentralized environment, as opposed to a corporate environment. A corporate environment can run user tests and focus groups, and it's very hard to do that in a decentralized world, other than just putting software out there and see what happens.
Mm-hmm, mm-hmm. And I suppose from a technological standpoint too, I mean, obviously you guys have developed these smart contracts for Bitcoin, so they port over easily for Litecoin, whereas with Monero, you kind of would be developing something from scratch, right? To try to make
Yeah,
smart contract aspect work.
yeah, I'm not an expert on how scripting works in Monero, but my understanding is it would be a pretty significant rewrite, and I have not been involved in any investigation as to how hard that would be to do. I believe that it's technically possible, but yes, it would more or less have to be a rewrite, and there would also have to be a good reason. I mean, the reality is that in order for a synthetic asset to work in our system, it's got to be based upon an asset class that's highly liquid, and Monero is pretty liquid these days. It's not as liquid as Bitcoin, but it's pretty liquid. The market cap has to be huge, because if I have millions of people doing this by holding Apple exposure to Apple or dollars or whatever, I've got to be able to support millions of people doing that within that asset class. And so that part is pretty hard to do outside of the top 3 or 4 cryptocurrencies right now. And then the last part is the programmability around smart contracts, whether it's via multi-sig in Bitcoin or just normal scripting in Ethereum or whatever the equivalent would be in the other assets that we might choose to use in the future. Those are really the 3 base requirements that you have for making a synthetic asset work in a cryptocurrency-based model.
Right. I mean, I guess if it were to happen, it would be interesting to see if somebody in the Monero community themselves did it, kind of as a,
Be awesome.
an Abra for Monero.
I would love that.
And then,
and if it works, and we could buy them, so that'd be cool.
There you go. And they would have to start off small, like you said. I mean,
that's what we did
because of the liquidity issues.
Yeah. Look, when we started Abra, we got our Series A funding. I mean, Bitcoin was worth a fraction of what it's worth now, and we kind of predicted to our investors, look, if this is going to work, the Bitcoin ecosystem is going to have to grow at a pace that either is slightly behind us or certainly at par with us, and that's basically is what happened, right? I mean, you see kind of slow growth in the core capabilities that are released, and in a decentralized governance-free environment, that's probably what should happen. And that's worked for us, right? The exchange-based liquidity has been there. The multi-sig capabilities have worked great. We've yet to see any significant bug or hackability in the network, and that just validates the requirements that I just mentioned, really.
Mm-hmm. So how did Abra start? I mean, what was kind of like the first, when did you guys actually first develop these smart contracts? Because that's really the core to what your technology is. That was kind of the breakthrough, right?
The impetus for having a kind of bankless environment for storing assets in a self-sovereign way, or having agency over assets that you manage, and being able to transact peer-to-peer with those assets really came from my history in payments, banking, and money transfer. I've been at this for a long time. I was on Wall Street for a while at Goldman. I was at Netscape, and I worked on developing certificate authorities, for example, back in our original SSL days at Netscape. And so I've seen all kinds of permutations of the tech, but I've also worked on things like money transfer and remittances in developing markets in Haiti and in Mexico, Central America, Philippines. And I wanted to develop a single banking app that really worked like WhatsApp does for messaging, but for money, meaning develop for the first time a global app that could function as a WhatsApp for money, whether it's for money transfer and payments, investing, lending, borrowing, if you're from the consumer's perspective. There is no single app that does all of those things. Most large countries have 1 or 2 apps that do portions of them, right? Whether it's Cash App or Venmo or WePay in China, or Transfer in Mexico, or whatever. There's lots of examples in different countries. So, but there's lots of legal reasons why it hasn't happened in a global footprint cross-border model. And a lot of that just comes down to regulation and trusted third parties versus no trusted third parties, or what I call, self-sovereignty over your assets. And so the idea of Abra was, can we develop an app that allows me to hold $1 on a smartphone for the first time? Because if I can put the $1 on this, that means that if I can, and at the same time, if I can transact it peer-to-peer, like, a string between the two phones to move the money, and there's no financial intermediary in the middle, well, then I probably have a model that will work globally peer-to-peer. And that became the idea of the synthetic asset, originally the synthetic dollar, if you will. But once we had created that, which took a while, we realized that we had the ability to basically create a synthetic version of any liquid asset in the world, dollars or fiat currencies, equities, commodities. If it's liquid, and it has to be liquid for purposes of hedging, but beyond that, it would basically work for anything. So not only could we support payments and money transfer, but we could support investing. We could even support collateralized lending in the system, which is something that I want Abra to be doing in the future. In other words, I could be using that Abra app, put a bunch of money into Apple and borrow against it and turn the collateral into a smart contract as collateral. And that's relatively straightforward with a modern smart contract architecture. And so this synthetic asset really was the impetus for the synthetic asset was really this idea of how do we build a new type of smartphone app that really gives the consumer agency over their assets, allows them to transact in a true peer-to-peer model in a decentralized sense, like Bitcoin, but in a way that was usable for the average consumer. The original bet was that people like the idea of self-sovereignty and agency over their money, but are confused by Bitcoin, right? If you go beyond the 20 million people that probably have a few dollars in a crypto wallet, whether it's online at Coinbase or offline at Abra, beyond that, most people don't understand what we're talking about. And that's the reality of where we're at. And so the idea of being able to have a synthetic dollar, if with the right user experience, or a synthetic Apple share with the right user experience, means that somebody in the Philippines can receive money from somebody in the US peer-to-peer, or somebody in Mexico can invest in Apple shares without actually having to go through their bank, or can invest in spiders without having to go through their bank, and convert those to Monero when they're done, right? And then withdraw it to a hardware wallet. All of that is being done without a financial intermediary. That's the breakthrough that I was going for with Abra. And it's actually, to be honest, really expanded beyond what I thought was originally going to happen. And it's been pretty exciting because we have hundreds of thousands of users all over the world now doing stuff with our app. It's just so cool.
So yeah, at what point did you see that larger vision of synthetic assets? So you said, so kind of the first one was the dollar, right? Did you already know it at that point when you guys are trying to do that? Well, that it was like, then the guy in Venezuela could buy Apple stock? Like at what point was that?
That's a good question. I mean, the vision was there from the beginning. Like I wanted that WhatsApp for banking. That's just, whether WhatsApp for money, WhatsApp for banking. Like that was, I've wanted that since the very first regulator meeting I've been in, right? When I just, my head was ready to explode after the meeting, probably going back 15 years. First time I came out of a money transfer regulator meeting, when I said, they don't understand what I'm talking about, my head's going to explode, and I said, well, there has to be a way for me to do the equivalent of have the cash in my pocket and hand it to you. I can't hand it to you right now because you're a flat guy on a screen. And so, but if I can do that synthetically, like with the proverbial string between the two tin cups, but using the internet, that's interesting. But you can't actually put a piece of paper in the phone. It has to be digital somehow. And that led to the idea of the synthetic asset. But then eventually we realized, hey, this technology really does enable this entire vision, right? The technology kind of caught up, or our understanding of what we had actually caught up with the vision. And that was a big breakthrough for us. I mean, it was like a real aha moment that we were really onto something here. Look, we have to comply with regulations all over the world. And there's no such thing as, a regulatory arbitrage system that says, okay, you're free to go do whatever you want, anywhere you want. But as soon as you remove centralized custody, as soon as you remove, a centralized financial intermediary, you're largely, not completely, but you're largely liberated to enable people to transact in a mostly self-sovereign way. And that in of itself is a big breakthrough. And it right sizes the compliance and regulatory oversights in a hopefully manageable and realistic way for Abra as we grow over time.
Mm-hmm, mm-hmm. So where are we? This is very exciting. I mean, it is. I think it's very cool because you guys are like kind of living up to the visions of what Bitcoin was meant to do, right? So it's like becoming the rails of the new financial world, and Monero as well, hopefully. So are we at the point where somebody in Venezuela could essentially buy Apple stock through Abra with
Oh,
Bitcoin
it's
that people
happening
grow?
today. So,
Okay.
so this is pretty cool. So one of the things that we see now is, and this originally happened before we launched the equity product internationally, is people were doing things like going to local Bitcoins, buying Bitcoin, putting it in the Abra app, and then storing it as dollars. Because if you're in Venezuela or Argentina, there's a history of people storing money as dollars, but then the government confiscating it. But they can't do that with Abra because you're holding the keys to those dollars, right? And so and in the stablecoin model, there's still dollars in a bank, right? So that's a kind of a financial risk. But with Abra, you're holding the collateral yourself, right? So even if there's reasonable volatility in the system, that's the risk you're taking. The risk you're taking is only the volatility of the dollar versus Bitcoin. It's not all of the dollars you're holding because there's a hedge in the smart contract. And so that's a big breakthrough. And so now we're seeing it with equity investing as well. But we saw it right up front with just people putting Bitcoin in and converting it to dollars or euros.
I hate to get ahead of ourselves here, but is there kind of a world beyond Abra? Do you ever think about that? I mean, like for example, we have BISC, which is kind of transcending exchanges, and it's like a decentralized exchange. Is there potentially a more decentralized version of Abra that we may see in the future? Something where,
Yeah.
go ahead.
Well, I would like Abra to be a more decentralized version of Abra. I think that there's a couple of things that I'd like to see happen over time. I'd like to see the counterparties to the system, be fungible out on the internet. So right now, Abra is the counterparty to the contracts. I would like Abra to get out of that business. We actually don't make money as the counterparty. We make money on a spread, and there's lots of ways to do that. You can take a rake by just brokering two parties to come together. And there's legal issues with doing that in different countries, and we would want to be cognizant of how to do that. But that's a much bigger opportunity, and if it's done correctly, I think a big breakthrough. Right? I think decentralized peer-to-peer lending hasn't really been achieved at kind of like Bitcoin decentralized scale, and I would very much like to see Abra evolve into something that's much more of a decentralized network where we simply become one player on a network that we've enabled for everyone. Our vision was not to own the app or the user experience. Our vision was to enable that. We've done what we've had to do to be in business so far, dealing with the limitations of the small company, the limitations of what Bitcoin and other technologies can do, the limitations of our dependency on exchanges, et cetera, et cetera. But that's going to evolve as well. And I think that will enable more types of decentralized services that are more decentralized than Abra is able to be now, right? Yeah, I don't know whether that's 5 years out or 20 years out, but it's going to happen. And whether it's me or someone else, it's going to happen.
Does it ever get to the point where the kid in Venezuela can essentially buy Apple stock anonymously? Do you think that we ever
I
get to that
don't
point?
see how that doesn't happen. I mean, if you really think it through, I think, okay, so there's this discussion going on with the international regulators who basically set global policy around what we call the travel rule and money transfer. And this isn't something that's specific to crypto. If you're Western Union or MoneyGram, you basically have to follow, or banks, you have to follow certain rules about knowing your customer's customer, for example. So meaning, where did the money come from? But not just from you, but from the person who sent it to you, right? And so they have issues related to this in their existing money transfer business. But now they're trying to extend those rules into crypto, right? Which is particularly interesting for your community and our Monero community. And look, long term though, those concepts are completely untenable, right? For things that your community and our users of Monero and Zcash totally understand, which is that technology is going to make its way into everything, and you can't stop it. We know that. Okay, so in the meantime, yes, we'll have to adopt technologies because the government tells us to, that basically, especially if you're Coinbase and centralized exchanges that say, hey, we won't allow the money to come into the Coinbase account if the UTXO is traceable back to some dark website, right? But 10 years from now, that is an untenable request because there won't be any such thing as a UTXO set that you can trace X levels deep. That's my prediction. I could be wrong, but that's my prediction. So that leads to the answer to your question, which says, okay, once you basically know that movement of the crypto assets can be completely anonymous or will likely be completely anonymous across all asset types that are digitized, then what you do with those smart contracts is private at that point, right? Because two people can basically use a free piece of downloadable software to enter into a bet that say, I think the price, I, the guy in Venezuela, thinks the price of Apple is going to go up. You, the guy in, or the gal in China, thinks the price of Apple is going to go down. We digitally sign this contract, agree on how much of the principal goes into escrow, and it's self-settling. And we can't stop it at that point because we both agreed on what the oracle is to determine who's in the money on the contract. So that's not possible today, right? But that I would be stunned if something like that wasn't possible in the next 36 to 48 months, right? And it's not dissimilar to what's happening with things like DAI and where basically you have an almost completely independent, decentralized, management-free system that pegs the value of a bunch of assets to some arbitrary third-party asset, which is another way of asking the same question you asked. It has to happen. I don't see how you don't go from the way things are to that scenario in some way. I just can't see how it doesn't happen.
Yeah, it seems inevitable. I mean, because it just seems like it's the more efficient version of what we currently have, and that's what we're trending towards, right? So it's kind of creating
Exactly.
this more fluid economy where value can just be seamlessly transferred from person to person, whether it's stocks
Sure.
or currencies or.
Yeah, and I think we're probably in this model for a few decades, maybe even at least for a couple of decades, where most people will continue to transact via the models they understand. You go to Fidelity, you go to Schwab in the U.S., or the equivalents in Europe and Asia, and you basically use your bank account to fund an account, and that account gives you what you want. But if you're in countries where that's simply not possible because of the corruption, the banking system, it's just cut off from the third party world, and you want to transact, that's where this, I think, will become really interesting.
Mm-hmm.
And who knows, in some ways they may end up leapfrogging what people in our countries are doing out of necessity, from certainly from a technology perspective, right? But I think that necessity here will breed innovation, and as we start seeing corrupt governments that have a history of inflating the value of people's money to zero, and doing it over and over again, we will see solutions from technologists who are basically saying, enough, here's a better way to do it. We can compete with the government in a way that they can't stop. And that's not to be anarchist or anti-government. That's just to deal with the reality of what individual consumers are seeing in certain countries. And so we'll see how that makes its way into our lives, where we do have kind of quasi-efficient banking systems. But it's going to be a really interesting few years for sure.
Well, you obviously really get this stuff. I mean, you're obviously a guru in the space. You really understand this on multiple levels. So, I mean, this is the Monero Talk Show. We talked about a little bit. You said you kind of have the cypherpunk ideals, but even just on a technological level, and for all these things we're talking about, do you see Bitcoin's lack of fungibility as potentially being an issue or a hurdle to achieving some of these goals, and something that it may not be able to overcome on a protocol level? Do you see that as being a problem? Do you see that as a shortcoming? And then if you do, or if you don't, how do you then look at something like Monero that claims to be certainly more fungible than Bitcoin?
Sure. Now, I mean, what I'm telling you now is more personal opinion. I don't think Abra really has a stake in the short term on this question one way or the other. But so I'll speak as Bill Barhydt, not as the CEO of Abra per se. I actually do think that the lack of fungibility in Bitcoin is going to become, it's not a big problem now, it's going to become a big problem. Let's look at it in the analog. Okay, if you take the average dollar bill in the US, and you put it under a microscope to figure out what's on it. The average dollar bill has illegal drugs on it. It has traces of cocaine. It's got traces of shit. It's human feces. Sorry. It's got traces of all kinds of stuff that would just, it's disgusting. Not to mention the fact that it's got illegal stuff on there. So what does that mean? So if you basically paint an analog from what's happening in the crypto world, none of us should be allowed to use those dollar bills, but nobody stops us from using them. We would all laugh if we said we should be stopped from using a dollar bill that, 10 holders ago, somebody used to snort cocaine, because I have no way of knowing that happened. Well, in the crypto world, we're actually now starting to get to the point where we're expected to know that happened, or the digital equivalent, right? It makes no sense. So I feel like this fungibility issue is just now becoming an issue because exchanges in particular are being asked to police the downstream origin of where people got their crypto. I understand why, again, just going back to what happens in the traditional money transfer world. But as crypto starts to get cycled around and around and around, and people had no idea who's holding it, 2 or 3 people downstream, you're asking people to police something that I think at scale is just untenable. Now we deal with it because there's very few people holding crypto in the big picture. Crypto doesn't move around on chain a lot. Most transactions happen off chain on exchanges, but that's going to change. And as that changes, I think this fungibility issue is going to have to be dealt with head on for Bitcoin, but also for Ethereum, Ether, and all the other coins. And I think second layer technologies also represent a significant issue here. And I also think that we don't spend enough time thinking through the privacy implications of layer 2 tech. I think there are PhDs, working on layer 2 stuff at MIT and other places that are thinking about it. But I wish that more people on the application side would also be thinking about it as well.
Mm-hmm. Yeah, that's interesting the way you describe it. I mean, in the fiat world, I mean, the fungibility is essentially mandated, right? So even if right, we say you have to accept $1 equals $1 no matter what, whether you received it from a drug dealer or not, right? And that keeps things fluid. But yeah, in the crypto space, we're trying to use this tech, and do you think, because you're basically saying you feel like it will be overcome because once these things are used at a very high level, once Bitcoin's used at 100x to what it's used today, you'll essentially no longer be able to trace transactions, or it would become impractical. So you don't think it needs to be fungible on the protocol level? You think they'll always, it will kind of work itself out in terms of size?
I don't think it'll magically work itself out. I think somebody's going to have to do something. Okay. Coders are going to have to do something to proactively create capabilities within the protocol that make this fungible. There's going to be no pixie dust sprinkled on top of Bitcoin and all of a sudden makes it fungible, right? So it's going to require, in the case of Bitcoin, probably, folks in Bitcoin Core saying, hey, I want to work on this, and then having the community support it, like any new feature in the Bitcoin Core capabilities. So, but I think that there is an analogy, again, in the analog world. If you take $1,000 to your bank and say you want to deposit that, the bank will ask no questions about where the money came from. But they're quite capable of scanning that money to find out what's on it in terms of, all the disgusting stuff that I talked about before. But they don't do that, right? For some bizarre reason, they're not required to do that. And I say bizarre because the answer is that they will never be able to take a deposit again, because every single dollar bill is tainted. So why do we make a difference then for electronic transfers versus paper cash transfers versus cryptocurrency transfers? They should all be the same. And the reality is that unless the government explicitly knows that somebody is doing something wrong and has a court subpoena to basically go figure it out, they're wasting time and money with this effort, right? And they're going to lose. The amount of money that we spend on AML and AML-related processes versus the the wins that the government gets as a result is insane. It's just the biggest mismatch. The only thing that's probably worse is the war on drugs. Mm-hmm. And so it has to end at some point. And I think crypto is probably the single best chance for it to end. And then that points to the fungibility issue, which I think people will ultimately want. They don't understand it. It's just like hacking. People don't understand hacking until they've been hacked, and then it's too late. right? And so I think that, and then the same thing happened with Facebook. They abused, a lot of these privacy issues enough to the point where people did start to care. At the beginning, a lot of people talked about it, but most people just didn't care, right? It's not like people complaining about privacy in social media is a new phenomenon. What's new is people starting to care, right? And still, most people don't care. Yeah, that's the reality, right? There's books out, people I know, there's pundits on talking heads on TV, and the average person still doesn't care, but way more people care than what used to. And so the issue with all this stuff is that until it becomes personal, right, it's not. And so in our world, things become personal because your account becomes blocked for no apparent reason. You can't do a deposit or a withdrawal, or you've been hacked, on an exchange and you can't access your funds, et cetera, et cetera. That's when it becomes personal. That's when you start to say, oh, maybe I should have been using a non-custodial wallet for this stuff in the first place. Or maybe I should be using a privacy technology like CoinJoin or something else to move my crypto around in the first place. And so this is where smart developers who have these insights, who understand, what it means, to be a cypherpunk should say, hey, if we're in the know, we owe it to the community to have the foresight to do what's right. Right. But you also have to have developers who are excited to work on that, because nobody's putting a gun to an open source developer's head and said, go work on this. That doesn't work that way. So you've got to combine, this is stuff that people want to work on, with the need, right, with the foresight. And it all has to come together, but it's going to happen for sure.
Very cool. Thank you for the good answers.
Yeah, thank you.
Let's see what, there's a question that's been coming up. I guess the fees for withdrawing Monero are currently quite high on Abra. Are you aware of that? Yeah. Is that something that
I am. That's something we're working on. Okay. The initial implementation, is using. It's partially based upon our Bitcoin implementation, and so we're trying to undo that. It's going to take a little bit of time, but we will get there. But I am aware of the issue, and hopefully it will be fixed very soon.
Okay. So how about like regulations? So these are all like SEC regulations, tax implications. Obviously, these are things that you guys have to deal with on a daily basis. Or is there some kind of, is Abra just like a traditional exchange, or is it approached a little differently, given the fact that it's all kind of based on these smart contracts and not actually trading actual securities and things like that?
Yeah, so for the native coins, we basically route conversions across exchanges. So Abra doesn't actually touch the assets. So it looks like a little bit like an atomic swap, but it's really actually happening via an exchange partner. So in other words, if you're going from native Ether to native Monero, for example, that's not Abra acting as the counterparty. It's literally just happening on an exchange. And so that's the process there. But in terms of the legal question, look, I mean, we have customers all over the world, and it's a never-ending process to work with regulators. We have lawyers in many countries at Abra, and we have operating subsidiaries which have their own lawyers as well. And so I'm constantly talking to regulators about educating them about what we're doing. Many are still in learning mode. And so, we talk to all of them. Obviously everybody's seeing what's happening with Kick and the SEC there, and it will be really interesting to see how that plays out. And I'm very surprised at how publicly it's playing out, but it actually, of course, makes it more interesting. But we've been as reasonably cautious as we can be and proactive as we can be in getting out in front of all of these issues. So, for example, with our equity product, we filter out U.S. users because U.S. law is very unique in terms of what we're doing there. And then our lawyers are engaged to basically figure out a model that would allow us to eventually and hopefully launch that product to U.S. Persons as well. And so it's just one of those features where if you're using Abra and you're a Singapore person, you actually see a slightly different version of Abra than if you're a U.S. person. We try not to do that. But we also are committed to obeying local laws, right? So by and large, it does turn into a single app globally, but there are a few exceptions.
Mm-hmm. And then how about I hate to call it privacy coins because I don't really like to call Monero a privacy coin. I just think it's digital cash. It's a cryptocurrency. Are you guys thinking about those differently because of regulations as well? Is that on
No,
the
I mean,
horizon?
our model's a little bit different because it's non-custodial, right? So we're fully committed to the user being in control of their own assets. And so if you have the keys to your Monero, what you do with that, it's up to you to obey the law. Just like when you have $100 in your pocket, it's up to you to not break the law with $100 in your pocket. And so I don't think there's any regulator that I've spoken to or heard of that has expressed concern with users using what you're calling a privacy coin on their own in a non-custodial peer-to-peer model. They do express concerns about banks and exchanges getting into that because of things like the travel rule that we talked about before. But I also believe that that's a short-term kind of sub 10-year problem that's probably going to go away. I could be wrong, could be naive, but I think that they're going to fight a losing battle long term on that. But the non-custodial model, I think, is fundamentally different. Because at that point, you're saying, I, as a consumer, have agency over my money, but I also have agency over the idea that I shouldn't break the law. And then at that point, it's up to me to not break the law, not up to Abra to basically guarantee that I don't break the law because Abra's not holding my money. Right.
Gotcha. And then, so in terms of the smart contracts, I guess a few questions. Is anybody else doing anything similar to that? Is that is Abra kind of the one and only? And that's
yeah. I have heard of a couple of companies that are trying. I haven't seen anybody getting any traction. There's a lot of moving parts that have to work correctly. I think if you look at the DAI model, there's some overlap in terms of our philosophy, in terms of how their synthetics work and how our synthetic works. I haven't seen the details of Facebook's announcement yet. We'll see what they come up with. But that's probably more of just a traditional stablecoin is what the rumors are. So we'll see what happens. But stablecoins are just that. It's cash in a bank, and that's either in the U.S. treated as a money transfer product or an e-money product in international markets. And so there are synthetics in kind of traditional Wall Street trading that are not based upon crypto. They're just based upon underlying fiat positions that are stored in accounts, right? But that's not what Abra's doing. So I do think what we're doing is very unique, at least so far.
Are you guys like filing patents? Is it open source? Is it
Yeah, we're really not looking to patent up here. We really want to build and be, a good steward of the overall kind of cryptocurrency ecosystem and programmable money ecosystem. And I don't think that Abra's success is going to be based upon protectable IP anyway. I think it's going to be based upon solving consumer problems and our ability to give consumers a really good product that they are excited to use, not because we have some patent that everybody's going to have to pay me, a tenth of a penny on when they do a P2P transaction or some nonsense like that.
all right? I mean, I think we basically covered it. That was that was great because I know you've been on a lot of shows, so people have certainly heard a lot of the basics of Abra. But I wanted to kind of take obviously the Monero angle here, which I appreciate you coming on. I appreciate you sharing the good news that it's going to be added natively, which is very exciting. Anything else you have that you want to talk about in terms of Abra or Monero?
No, look, the Monero community has been really supportive of us over the years. Ricardo and I talk every once in a while, and we hang out a couple times a year, and I've always enjoyed that. And I get into interesting discussions about where all this is going, and so I'm really excited about where we're going with these capabilities. And look, we're a very feedback-driven company. And so the one thing I would definitely say is that, keep the feedback coming. We do pay attention. We read it religiously, Reddit, Twitter, Facebook, all of it. And so, or our blogs, people respond there too. And, it definitely impacts our roadmap for sure.
I know I personally will be paying more attention to Abra, and I look forward to using it once it's completely native, putting some Monero on there and seeing what I can do with it. So hopefully eventually being able to buy, some Tesla stock down the line.
There you go.
Down the line.
There you go. That would be amazing. I
Yeah.
look forward to that.
Well, thank you again. Thanks for the great technology. Thanks for doing everything you do. I appreciate you taking the time.
Oh, my pleasure. Thanks for having me on. It's been awesome.
All right. Thanks, Bill. Have a good one. Oh,
Cool.
Denver. Are you going to Denver?
No, unfortunately
Oh,
not.
okay.
I wish I was. I wish I
All
was.
right.
I've got
I
other
got.
travel coming up.
We have the. Do you know we have the Monero conference in
Yeah, no,
Denver
I
in
know what
June.
you're talking
Okay.
about. Yeah,
Okay.
unfortunately, I won't be there this year, but I'd love to go next year. So I'll make sure I work it out, plan better in advance.
Okay. Well, for anyone that's listening, just a reminder that the Monero conference is happening in Denver on June 20th, I believe. Whatever,
Sounds right.
Google it. And then
Yeah.
we're throwing the pre, or actually the first night we're throwing a party. We rented a house in Denver for kind of a little house party, Monero house party for the first night for everybody that'll be attending the conference. So
Super cool.
Google
Now I'm
that.
jealous.
All right, Bill. Thank you.
Hey, thanks for having me on.
All right. Thanks. Good luck.
Take care.